right, guys. Hey, Bruce with Targeted Wealth Creation. I'm redoing this Roundhill. One of the guys pointed out to me in the comments that I mistakenly did not comment on YBTC, and instead he didn't know that. He just saw that I didn't comment on YBTC. But what I did was I took the weekly update for YBTC, the 29 cents, and I put it in the category of ETH, right? Ethereum. So that was not a good thing to do. So I'm just going to redo the whole video. I could have just gone in and I pinned a comment on the old one, but I'm just going to re-upload this one over the top of the other one. So let's jump in and give the basic data that you care about. So Xdte, the S&P 500 paid 20 cents. So that's down from 22, down from 23. There has been a 17, a 21, and 18. So it's not out of that context. But I do want to point out that it's very close with it down 1.56. So this is dropping. This is the week to week change, right? Since these are weekly. So whenever you see red, it's dropping. Even these greens are a nickel and 16 cents, whereas these are 30 and 31 cents, right? It was up $1.47, but it was down $1.25 the week before. These are kind of ugly. So going back around here, there was a base of 51, high 51s, 52, 53, all through months 10, 11, and 12. And then as we got going, we started to drop the end of the month down to 50. Now you got paid nicely, um, but I'll just point out because you got more ROC and a makeup for all that stuff. So the point is, let's take a look at this chart. And what did I do on this? Again, this is looking specifically at the months rolled up. Since this is a weekly fund, you don't see the months rolled up like you used to, right? Green means there were 5 weeks in that pay period. I go by the pay date. Like if they declare on 12/29 and pay on 1/2, I count that as January, right? So 97, 88, 80. Okay, these had been the two lowest. We had August in here, where if you guys remember, we started off the first week of August and the markets got slammed. And all of a sudden they bounced back and then just continued on up. So that ended up being a great month. When you consider that it was a 4 week month, it beat all of these three prior 5 week month payments, right? So you collect 5 times, all the brown is 4 times. The issue is we finally came along at year end, and you all know how year end works, right? They come out and they pay you multiple times and they pay more. Then we had a 5 week period in January, but look at this. This is 83 cents, getting second lowest over 3, 6, 9, 11 months. Okay. So that's the story on the S&P on the Xdte. Again, you guys that are long-term average in, even though I will say all the signals are pointing to March being a down month. The only thing, we may get a little bounce in Nvidia since it reports on the after the market on Wednesday of this week, right? Tomorrow really, or early morning already when I'm doing this on Wednesday. But I don't expect that to last even if that happens. I would call it 60% chance they don't do or it isn't interpreted as good earnings, and 40% and 60% probability that it continues on down even if it gets an initial bounce. And certainly in March we're going to have pullback in the indexes. All right, so let's go look at the Nasdaq. How'd the Nasdaq Qte do? Well, it always pays better. It has a lower price. The yield's higher, right? 35% yield versus 21% yield. So This one has a 26-cent payment, 25.9. But the price is also dropping. It just had more stability here. But I want to point out something. Over the last four payments, when I add them up, look at your chart here. This is a new low, right? You had a 5 week payment. You had what? I think they may have one. No, I think they have the same number: 3, 6, 9, 11. Yeah, so there's 11 full months of payments here. This being February, January, December. Trying to label all this stuff and keeping the chart perfect. It's more just to have a glance at it and see what stability is. So this 98 cents is below 99 cents for November and certainly back over here. So you just got a new low in the NASDAQ 100 in terms of Roundhill monthly payments. All right, let's go look. You just talked about that. Let's look at the Russell. There's your payment, 25.9. Let's take a look at the Russell. Paid 19 cents. We did not have a 19 cents anywhere in this scenario. We had a 20. There's another 20. It has not had. Now, this is a smaller time base. And I summed up these weeklies here. What I should do is go make these the orange color. If they're not 5 week patterns, then they should be orange. And then I ultimately need to do a chart here, right? So that is a new low, kind of by far. You had 120 essentially. Here you are at 93 cents. So there's no question the market is showing a lot of internal signs of a pending rollover. We haven't seen the big, percentage down, although, we're pushing at times. So we shall see. I think Friday at the end of this week will be very interesting. Let's see if we get shoved down. The algos are always at work trying to make sure the puts and calls end up profitable for them because it's institution money that writes those, that sponsors those calls. It's retail that buys them, right? Buys or sells calls or puts. And it's the institution. So when they use algos and big money to push it around so that they don't have to pay out, so they don't pay retail the money. All right, so the part that I wanted to cover on you guys that I screwed up previously, let's get right to YBTC and then I'll go over it. So I did not do this one, right? I just left it and it paid 22,966, so call it 23 cents. And it's almost like this is a weekly payment. So I jammed it into Yeth and said, oh, what a lousy payment, which Yeth still pays on the monthly basis. So here's your 4 weeks now summed up. And that's $1.36 for this. Let's see, 1, 2, 3, 4. Yeah. 317. So you look at some of these. We have, there's an October that only had 88 cents. So what happens here, guys, just so you know, that Roundhill started turning YBTC into a weekly. Even though I'm showing all these weeklies, it's only two summed up months, right? February had 4 weeks, January had 5 weeks. So if you go back 9 payments, whereas all the rest of these are just plugging in the previous monthly number. But it's a good way to kind of look at this stuff. We had a 133 all the way back in January. Look at March, 204, 91. So we've had a few instances, an 88, a 91, a 133, and here we are with a 136. So this is something. Ybit is paid this month. YBTC has now paid its final weekly. As you guys know, Ybit under Yomax is still pays monthly. Now, what's the difference in these funds? I always like to be able to look. Well, the big difference is the NAV erosion. Welcome to Yomax, right? The gain or loss over how many days? 310 days is 56% annualized. The real amount is 47.87. So add the 55 days and you get it to 56%. So you're actually red here. Sometimes I do conditional formatting. Sometimes I come in and change it. So whereas this one lost money, that's fine. Everyone, oh, nav erosion, you're lathered with the oil of nav erosion. Guys, it's a real phenomenon. It's not a made up thing. And I'll be the first to tell you, this isn't bad. I'll take 37.99 an annualized return any day of the week. I'd love to do that 10 consecutive years, right? I mean, one can only hope. And anybody that believes it's just an easy going to be given to you by the markets, you got another thing coming. But on the other hand, I don't want to lose money. And somebody, well, you haven't lost, Bruce. You still own it. Well, I've lost it on paper. If I had to liquidate, that's what the value is. Margin is only working off what the value is. All of these other things, it's a real value, even if you haven't taken the capital loss. Now, granted, if this thing continues on and pays at these percentages and you hold it another 5 or 10 years, you eventually will come out ahead with the dividend yield. I'm not saying that isn't real. All right, guys. So the only other thing I got for you is ETH, um, crypto, Ethereum. Now I've got this $1.89. I had the 22 cents and I was like, what happened to this thing? I just figured it was based on this. Look at this change, guys. Minus 212. That's all in the realm of what's been normal. Minus 13. It's at 38 and a quarter, right? That's ugly. So now the gain or loss is 20.3% over 170 days. What is that? 43%. Okay, and an annualized basis. But in some fairness, it's certainly still got a over 25% total return because the crypto guys, these will pay. So anyway, guys, I hate having to redo a video, but my bad totally. And thanks to the commenter, I commented and told everybody what the real numbers were, but that's not fair. I don't, now if somebody in the future sees this, they'll see the real thing. All right, guys, this is Bruce with Targeted Wealth Creation. I'll let you go. We got Max still to roll in. I can't wait to start doing the Roundhill, Max, Neos. Defiance is not even in the game with the other people with their index fund. Their targeted fund isn't bad. All right, guys, I'll let you go. Bye for now.